So you want to become a dope day trader? Well, that's what we're going to talk about today.
Financial freedom, my only hope. Fuck living rich and dying broke.
What's good, everybody? Today we're going to be talking about day trading. One of my favorite subjects is literally the reason why I wake up and get ready for Mondays and Tuesdays and Wednesdays and every weekday. I love day trading. It has the biggest risk, but it also has the biggest reward if you do it correctly, right? So today we're going to be talking about a lot of different things. We're going to talk about laws I wish I knew before I started day trading. We're going to talk about strategies. We're going to look at charts. We're going to talk about market movement. We're going to talk about a lot of different things, but we're going to try to keep the video as short and informational as possible so you guys can get ready and go out and start being successful in the market. Before we start talking about day trading today, I'm going to assume that you have some prior knowledge of the stock market. I'm going to start the video under the assumption that you understand what stock indexes are. If you don't, you should probably stop and go read about them. It's really quick. It's not that long. But you need to understand things about the S&P 500, the Dow Jones, and the NASDAQ, right? Because that helps us understand how the market is moving overall. And if you don't understand how the market is moving overall, it's really hard to set your trading strategies. So before we get into that, if you don't have that knowledge, please take the time to come back later and educate yourself. One of the things that I preach is stock education. You need to understand how stocks move, and you need to understand how the market has been moving before you throw your money into it and it just be gone and you have no idea what happened, right? So education is what we preach. All right, so if you understand that, let's rock and roll. We're talking day trading, my favorite subject, the reason why I wake up during the week, because there's always money to be made, and I'm here to teach you how to make that money. Now, I'm no investment banker. I am self-taught. I've read some books. I've watched some YouTube videos. I've read Google, and I've also lost a lot of money in the stock market because I didn't do my due diligence. So I'm here to hopefully tell you things that help you not lose the same amount of money that I did before I actually started being successful as a day trader. Pros of day trading: you can make a lot of money very, very fast. There have been days where I made $700 in 4 to 7 minutes, right? But that's also a con. It's a double-edged sword, really, because just like you can make money really fast, you can lose money really, really fast. But my job here today, or at least what I'm trying to do, is to help you mitigate those losses, or at least when you start to have a loss, being able to identify the movement of the stock so you can get out, so your $60 or $20 loss doesn't turn into a $300, $400 loss, right? So that's the major pro of day trading, is you can make a lot of money really fast. The con is you can lose a lot of money really fast. The other con is the fact that you don't get the federal tax write-off that you would do if you were having a long-term investment. Day trading or short-term investments, anything that's held within under a year, are taxed at the same rate that your check is taxed at, about 10%, I believe that it is. Some people look at it as a con. I look at it as like, hey, I just made some money, no problem. Take my capital gain, tax it at 10%, I still made some money, right? So those are your two major cons of day trading: taxes, and you could also lose a lot of money. So the risk is there, of course, on both sides. So let's talk strategy. Strategy is very important. Without goals, you can't measure how successful you are. So we need to set our goals up before we even start opening a brokerage account or even giving a stock or a company our money. We need to have goals. My goal is to make 10% with every trade. No matter if I invest $1,200 or if I invest $500, my goal is 10% on every stock that I day trade. I know if I make 10%, I'm normally going to be at about my goal for the year. What is your goal for the year? That's the second thing you need to identify. There are roughly 252 days to trade. The stock market does close on holidays and is closed on weekends. You have 252 days to make this money, right? So if you make $50 a day trading, you're roughly going to add $12,000 to your salary. Sounds amazing, right? Super easy. We're gonna make $50 a day. So if you invest $500, it goes up 10%. You pull out, that's your $50 for the day. If you invest $1,000, it goes up 10%. You make $100 a day. So now you're good for 2 days. It's very easy to do. It's very easy to have. It's almost like having a second job. I don't know anyone who would turn down $12,000. That is what I mean by setting up your strategy. If you don't know small things like that, you're going to try to always hit the home run. You don't have to hit home runs when you day trade. So the first thing I would suggest you to do, sit down, figure out how much money you want to make. What are you comfortable with spending? Only spend money only put money into the stock market that you're willing to lose. Meaning that if you see that you have an extra $1,200 and you don't know what to do with it, and you may go maybe add it to your credit card, put it in your savings account. If you're okay with losing it, put it in your stock brokerage account. Trade with it. 10% of $1,200, you'll make $120 per trade. And it's only going to go up from there. So you'll make more money and more money if you do it correctly. So the first thing we do, identify our yearly goals. That will help us identify daily goals, which will help us identify goals per trade. Rule number 2, after we have identified our strategy, we have to have cash. Cash, 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 cash. If you don't understand why, I'm going to suggest you pause now and go look at the good faith rule. It's very, very, very important. If you violate this rule, you will get a nasty message from your brokerage account, and it will tell you, hey, you violated this rule and we are not going to allow you to trade with unsettled proceeds for 90 days, which is most people. I violated it twice, had no idea what it was until they froze my account. You can't buy and sell on credit, okay? You can buy on a credit, but you cannot sell on a credit. What is a credit? If I purchase 100 shares of a company X that's selling at $1, I have 100 shares, I spent $100. If that company X goes up to $2, now I have made 100% of my money, meaning that there's $200 in my investment portfolio that I can sell. I might say, hey, look, I only wanted to make 10%. I made 100%, great. I'm gonna sell. So now I have a credit of $200 in my account. I can then go buy another stock. So let's say I go buy stock Y, and stock Y is selling at $2. I can buy 100 shares. Stock Y goes to $3 in 30 minutes. I would want to sell, right? Because I just made another 100% gain. You cannot sell. You have to wait until those funds from stock X clears before you can sell stock Y. Even though you purchased stock Y with money that you made from stock X, it hasn't cleared your brokerage account yet. So, good faith law, go look it up. It's very simple to understand. If you don't have money to transfer into your checkings and savings account, you don't have money to day trade. So, rule number 1, strategy. Rule number 2, cash. Rule number 3 for day trading, at least for me, market movement. I want to know if we are in a bullish market. If we are in a bear market, I'm not day trading at all. Because you cannot predict bear markets. You never know when something's going to go up or something's going to go down. It can literally spike up and can spike down. Bear markets are very volatile and they're hard to predict. Rule number 4, and this is the best rule because this is that rule that actually gets you to start trading, right? This is what we're all here for. Rule number 4 is we only buy stocks that are running. What do I mean by running? I mean it's literally going up and we don't know why it's going up. Sounds crazy, but is going up, right? It's unusual volume and it's a low float and people are buying. So the stock is shooting up. We get in during the run. We don't get in before the run. We don't try to predict the run, and we don't try to buy more during the run. We get in the run and we invest and we get out. That is how I keep my losses to a minimum. I only buy stocks when they are running. I set my strategy, I set my interest, and I set my exit. And if it meets any of that criteria, I'm in and out. I don't get emotionally attached. I don't allow $20 loss to become a $300 loss. I don't allow a $100 potential gain to become a loss. So with day trading, a lot of people get caught up with the potential to make a lot of money. I've been in stocks where I had the potential to make $4,000 and I took my gains at $600. Why? Because you cannot go broke taking gains. You can go broke trying to make gains though. Point blank simple. You have to set your strategies and you have to be comfortable with the strategy that you set. Those are our 4 rules. Strategy. Identify your strategic goals for the year and your strategic goals for every stock that you invest in. Rule number 2, cash. Cash, 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 cash. Rule number 3, we want to invest in bullish markets. Look at those indexes, find if they're going up or going down. Rule number 4, we only buy during the run. You put all those together and it minimizes your risk for losing money in the stock market as a day trader. So what we're going to do now is we're going to migrate over to my laptop, and I'm going to show you guys some of the stocks that I've invested in and some of the things that I use to identify them when they start to run, where I got in and where I got out at. So let's get into the good stuff, which is looking at the stocks. So here we go, guys. This is what everybody's probably been waiting for, is to actually look at some stocks and look and see how our strategies actually apply to potential stocks, and how we buy, how we sell, when we're going to get in and when we get out, and how we set up our strategies, right? So I'm going to assume that we've all set up our strategies for the year, we set up our strategies for the day, and we set up our strategies per stock, right? So mine is $50 a trade, $12,000 a year, 10% per trade, right? So let's look at this ticker. YTEM is a bioscience stock. One thing to note, biotech, bioscience, if they get FDA approval or if they have any news that may be any proprietary information, they take off. They are very volatile and they run on the smallest thing. So once I saw it was a bioscience stock, I kind of knew like it was endless potential. And that's just kind of been how the year has gone. So the more that you guys pay attention to the market, the more you'll get to see trends. Like there have been tons and tons of penny stocks, and the penny stock is anything underneath $5 that trades in the stock market. There have been a ton of penny stocks that are biotech and biosciences that just take off. They are extremely volatile, and if you get in at the right time, you can make a lot of money. If you get in at the wrong time, you can lose a lot of money. So when you day trade, we don't really care about the company. We don't plan on being married to the company for a long time. We literally just want to be with the company and leave the company. Consider it like the one night stand of trading, and it's probably shorter than that. We are trying to get in for a small moment of time and get out when we've identified all of our exit and entrance strategies. So I'm using Yahoo here. Yahoo has a great finance site. I know we probably don't use Yahoo too much. We like to use Google, but when it comes to finance, Yahoo's ticker is probably one of the best free tickers that you can use. It's sometimes more up to date than the quotes that I get from our broker. It's amazing. I love using Yahoo in the morning or when a stock is running, right? So we identify our strategies. We have cash. We know the market movement, and now we see it moving, so we have to quickly identify our entrance and exit. So what I'm going to do is show you how fast it is to identify when to sell and when to buy during a run of a stock, okay? So the first thing that we normally do is we try to find stocks in the pre-market. And what pre-market is, it is the moment of time when the stock market has closed, but people are still selling or buying after the market is closed. So if you're on the East Coast, the market closes at 4 o'clock and then it opens back up at 9 o'clock or 9:30. If you are in Texas like I am, the market closes on Texas time, which it closes at 3:30 and it opens at 8:30, okay? So pre-market is any type of trading that happens in between those hours. So that's what this little green or pink area is here. So all these trades are happening after the market closes. What we like to do as day traders, and sometimes we hit it and sometimes we don't, right? If we like to try to identify pre-market movement. Pre-market movement is a good sign of things to come, or it can be a facade, really. So pre-market is going to tell you if people are buying. And if people are buying, that's a great sign, especially if people are buying before the market even opens. It's normally a good sign of things to come. So as you can kind of see here, there was a little bit of buying here. We have, so the market closed here at 195 for YTM. And then in pre-market, it jumps all the way to 216, 220. Sometimes you see pre-market go up and go down and go up and go down. It will fluctuate. But here we see two nice green candles. So I'm gonna assume that you guys have no idea what we're looking at. So I'm gonna try to explain as we go. So what is a candle? A candlestick is a measurement or interval of time that explains to you how the chart moves. So here at the top we see 319, and we look at the very bottom, we see $2.27. Okay, what does this candle mean? Green means good. Red means bad. A candlestick is exactly as it pretty much sounds. Sometimes you have these little peak things that stick up at the top of the candlestick, and that looks like a little spick that comes out of the candle that you light, and you have this big square. Everything that's filled in tells you pretty much the open and the close. So if a candlestick closes higher than it open, then that means it's green. If it closes lower than it opens, then the candlestick is red. So let's put it into application. This candlestick is green, meaning that it closes higher than it open. So we can look over here to the right hand side over here, and we can say that this candlestick opened at $2.27 and closed at $3.91. That's a lot of money when it comes to percent gain, right? So it literally opened at 227 and closed at 319. This is a great sign, guys. Well, these green candles moving up, this is a great sign for us as day traders because we can see that it's starting to make its run. This is a good sign. So you have now identified your stock. And how do we identify stocks that are running? You need a scanner. Yahoo has a really good scanner, and we'll kind of go to, I normally type in Yahoo stock gainers, and using this application, if you need something that's free and you're trying to figure it out, you come in here. They have all these different criteria that you can click in: small cap, mid cap, large cap, mega cap stocks. If you don't know what that is, please Google it. You can search for volume. Volume is the amount of shares that are being traded during the day. So if you buy and sell, if I sell 1,000 shares, that's 1,000 plus volume, right? You can go in here. You can add all these different type of attributes to find the stocks that you want. Things that I normally look for are already here. I may add price intraday. So that means what the stock is selling at. So I like to say I want to see any stock that is in between 30 cents and about $10, right? And I need the volume to be at least 500,000 because that means people are buying and selling. And I would like to see the price change that's greater than about 3%. And I can click find, and it will say I have 113 stocks that match this criteria. You can get a little more specific. You can make it small cap, mid caps, etc. And you can click find again. It messed up on us, but you can click find again and you see all these different stocks pop up, right? Let's refresh our page. You'll see all these different stocks that have gone up more than 3%. And then you can click on them and go through and start doing your due diligence on your stock. Roku is crazy right now. All right, so back to our stock. So once you identify a stock that's running, and this is a good implementation because your scanner should have found this, because this is like a 60, this is like 100, this has almost gone up 200% at this point in 20 minutes of the market opening. So hopefully you have a scanner that would find this for you. 200%, how do I know? Because it opened at $2.27, and then now is at this high was $6.16. So that's way more than 200%. All right, so we see this run happening. So as a day trader, what's our fourth rule? We only buy when there's a run, but we have to set a strategy. So what I do is, once I see a stock, once my scanner has picked up a stock and I see that it's running, I do this. I open up its entire chart. Normally I like to go to about 6 months because you get a little bit better chart. And we start identifying support lines and resistance lines. Support lines are lines where you feel like people are going to buy. Resistance lines are lines where you feel like people are going to start selling. So you identify these lines to help you mitigate your losses. We don't buy unless it's a breakout. Breakout meaning it's passing the resistance lines. If it breaks your support line, you want to wait until it hits the next support line before you buy in again. I do not buy but in between support lines. I only buy above the resistance lines, so I know that the stock has upward movement. And what do I mean by that? Okay, let's open up and start drawing. So we have a candlestick here at $2.25, right? So we'll draw this candlestick here, move it up here, like so. That's our support line. As you can see, what's the stock do? It's coming down here, it bounces off our support line, it goes up. Comes down here, what's it do again? Bounces off our support line, goes up. It comes down here, it goes under our support line. This is not a buy for us because it's downtrending. Then it goes up above the support line and then it takes off, right? So what you're trying to do is identify when you think people are going to sell with the support lines and identify when you think people are going to buy or there is a breakout. So our next line, so our support line here is at 257. Our next line, we're going to mark a resistance line. So we'll mark a resistance line right here at about 287. Our next resistance line, if it goes above that, would be right here at about $3.90 something. And then if it exceeds that, we have to keep mapping out these support and resistance lines. So as the day goes on, we know when people are going to buy and sell, right? So our next major line would probably be here. Bam. Here we go. And we'll keep going. I like to map about 3 or 4 different places. That way I kind of can have a good idea of where, if it continues to run, what's going to happen. All right, so we're about here. And we'll move this up. Here. All right, so as you can see, let's talk about our rules. We don't buy if it breaks support. We buy when there's a breakout, right? So if we look here, what's it do? It breaks the support line. Our next support line we said was here. We're not going to buy here because we're not sure what it's going to do. We don't know if it's going to go down here and keep going down or if it's going to bounce back up. Luckily, it bounces back up. We would have bought in here. It hit our next resistance line. And what's it do? It goes down. Hits that, about that same support, about like right here. It should probably be another good place to map out. So we could probably map this out here. That'd probably be a good one. Map this out right about here. So bam, it hits that support, breaks it, hits that support, and then look what it does. It breaks our support line, breaks our next support line. We don't buy in, breaks our next support line. It tries to bounce, but it breaks our next support line. So it hasn't jumped back up over any of our resistance lines. So once you go underneath a support line, it then becomes a resistance line. So it doesn't jump back up. It just keeps going down to that very last support line, right, guys? And now we see that it's starting to bounce up. And then it goes to the next resistance line. It breaks it. It hits the one above it. And it goes back down again. Hits the one above it. It goes back down again. So you have to be able to, you have to become so good at this. Because when you day trade, these are your lines that you're preparing yourself to set your exit or entrance strategy on. I killed that word. I apologize. But so now we set our line off of the 6-month chart and we feel pretty confident at it, right? So now we're going to go back into the 5-day chart. So we're looking at this 5-day chart. Let's zoom in on it and let's see how good we did with mapping it out. So remember, this is our first line of resistance. So we're here in this line of resistance and it breaks it. What happens when it breaks it? This candlestick breaks both resistance lines. So this is a great sign that it's a run, right? We literally broke 1, 2, 3 lines of resistance. So that's a good sign that people are buying and it's pushing through the resistance. So we would have got in here. We would have said, okay, it's running. How do I know it's running? You see, we look in this box. There's been 173.16 thousand shares being traded, right? So that's a great sign for it to have been 9:30 when the market opens. Already over 100,000 shares have been traded. So our next line, we go up, and this line is 300,000 shares have been traded. 1 million shares have been traded. Why does volume matter to us, right? So not only do we have to be able to map out our support and our resistance lines, we also have to understand the volume, because volume can be it can't lie. That's the one thing volume cannot do. Volume can't lie to you. So we see these green candles and we see that, okay, almost 200,000, almost 500,000, 1 million, over 500,000. Like, people are buying this stock. And as they're buying, it's breaking our support and our resistance lines. It's literally blowing through the resistance several times. So we would have got in about the second time it broke resistance, we'd have been like, okay, people are buying. And we probably would have gotten somewhere around 391, and took all the way off to about $8. So the next thing you have to do, what did I say? We identify support and resistance lines. And as a day trader, you have to get out as soon as there's a downtrend. So we would have watched. We would have got in here as it broke our second resistance line. And we said it's running. Okay, it's still breaking resistance. It's still breaking resistance. Here it touches resistance. We're not buying. We're not selling, right? Because it didn't break the resistance, or it didn't break our support. So I would have stayed in because our support is here. It bounces, right? This is just the next line of people waiting to get in. It hits our support line, then it goes up, and it goes up, and then it's still going up. But guess what it's doing now? It's going down, and it drops all the way. It jumps from $8 and some change all the way back down to $6.69. You could have got out anywhere between here and here. Once it hits this resistance, this support line, and it doesn't bounce, you start making your exit. You do not try to, don't ride the wave. You done made your money. You done made $3 per share. So if we do the math on that, let's do some math. If you had $500, right? Well, let's actually use this. I'm going to show you guys one of my favorite tools, which is the let's remove this and let's go to stock profit calculator. So this goes back to identifying our goals, right? You identify your goals. You have to figure out how much money or how high stock needs to go for you to hit your goals. My goal is $50 per trade. So we would have did YTN. We would have invested, let's say we had $100. So, or let's say we have $500. $500 divided by $3.91. We would have been able to get, this is news. We would have been able to get let's say 125 shares. So we would have had 125 shares. Let's say the final price was $8. Sales commission is what you pay your brokerage account to book the trade for you. We got in at $3.91, and we also had to spend the $4.95 for Fidelity to book our trade. This is how much money we would have made today. $500. Easy money. Easy money, guys. Easy money. And we didn't, the cool thing is this. We didn't try to, my chart's gone. We didn't try to predict when this was going to happen, right? We got in when it happened. We rode the wave. That's all we did. We waited for that joint to take off. We got in, we got out. We set our limits. We looked at the chart all day. We were watching it. We set our alerts. It's hitting our alerts. We got out. So remember our lines? What happened? It was here. Why did you move? So we had a line here, but it moved for some odd reason. But yeah, it hit our line here, and then it went down. It went down, it went down, it went down. Day trader, after it hits that line, you're out. You done made your money. Like, how much more money do you want to make? You done made $500. We get out. So that's how you map out your charts. You go to your 6, 7, however long you got to go to find your support and your resistance lines, whether you got to go to a year, 2 years, 5 years, however far you got to go to find your support and your resistance lines. That's what you're going to do. When it breaks your resistance lines, you're going to buy in. When it breaks your support lines, you're going to sell. All right. So let's clear this. And let's go to the second most important piece that I want to show you guys is your analysis on your stock. So while it's running, before it's running, if you have enough time, this is the analysis you want to do. This is one of my favorite sites that I go to. It gives me a lot of information on the stock that you can find very, very fast if you don't have a professional tool. So I'm going to go through and show you guys some of the important things to look at here. First, beta over here in this corner, right? Beta is how volatile the market is, or how volatile this stock is compared to the market. One means it's as volatile as the market, which is your indexes, the S&P 500, the NASDAQ, the Dow. Beta is how volatile it is compared to the market. So if this number was 1.2, it would be 20% more volatile than the market. This number is 3.5, meaning it is 350% more volatile than the market, meaning it goes up and down at a very easy and fast rate. Why does that matter to us? Well, it matters because if you map out your support and resistance lines well enough and you do a good job and you are patient, then you can make a lot of money very, very fast, because as fast as it goes down, it also goes up very fast. But if you don't do your due diligence and you don't map out your charts, you'll lose a lot of money. The second thing that you want to look at is shares float. What does shares float mean? When a company has an IPO, its initial public offering, if you don't know what that is, look it up. When a company has this IPO, what they do is they allot their amount of shares on the market. So they can say, I want to have 1 million shares, or I want to have 2 million shares, I want to have 10 billion shares available for trading. Shares float does not include people like CEOs who come into the company and they just own shares, or employees who own shares. It only is publicly traded shares for people who are not involved in the actual company. So board of directors, this doesn't include their shares of the company, right? So shares float are the amount of shares that can be purchased through the stock market. So this company has 1.5 million, and that sounds like a lot, but it's not, because when we look at this chart, the volume in 30 minutes hit 1.1 million, which is only 500,000 less than all of the shares available to be traded. Why is that a big deal? So if you have 10 marbles and I take 8 marbles, I just took 80% of your marbles. You're gonna value the last 2 marbles that you have at an extremely high rate, even if they don't cost that much, but they're your last 2. So that's pretty much all you had. That means someone else has the rest of your marbles, and those last 2 are your most valuable marbles. So the stock market goes up by buying and selling. If Adam has a candle that he values at $10 and Susie comes along and pays Adam $12, Susie's not gonna want to take any less than $12 for the candle anymore. She's paid $12, she's gonna want to make more than $12. That's how the stock market works. If Adam has shares of this company at $2, he bought from someone else at $2. He's not gonna want to sell at $2. He's gonna maybe want to sell at $2.10, $2.30. Someone else is gonna come along and buy at $2.30. They're not gonna want to sell at $2.30. They're gonna maybe want to sell at $2.40, $2.50. That's how the market goes up. So when we look at these numbers, we have to know what they mean: short ratio, beta, all that. All right, so shares float are all the numbers of shares that are available to be traded. The lower the amount of shares floated, the faster a stock will go up on low volume. Low volume meaning 100,000, 200,000, 300,000. So smaller number, more volatile, faster it goes up, faster it goes down. Companies like Apple and Amazon have like billions and billions of shares available. So if we go APPL, we'll look up Apple, or AA. I always mess that up. Apple, here's Apple's charts. Look at this. It's 20% more volatile than the market. Our company was 350% more volatile, and it has 5.13 billion shares floated. So if I sell 100,000 shares of this company, Apple's probably not going to move, because 100,000 is a lot smaller percentage-wise of 5.3 billion than the other company at 5.1 billion, I believe it was. Or 1.5 billion, yeah. So shares float, not a lot of shares. The more people are buying and selling, the higher up it's going to go down. So extremely volatile. The other thing you want to look at is short ratio and short float. So shorting a stock means you're buying and selling it in hope that it's going to go down so you can buy it back. If your short float or your short ratio is low enough, that means that people aren't buying to sell it and buy it back. People are holding, so that's a good sign. If you don't know what shorting a stock is, please look that up. I'm not going to explain it in this video because we're already kind of going over time. So YTN, map it out. We'll do one more chart. No, I think that's good for the day. Just to keep the video short, I think that's enough information. If you guys have any questions, please send me messages and I can do another chart. But for the most part, that is kind of what I do. I look for things that may run in the pre-market. If they don't run in pre-market, I'm looking throughout the day. I have my alerts set to tell me if there's a stock that's up 20%, 30%, alert me and let me know. Once I get that alert and I see that chart or that ticker is running, I then map out my support and resistance lines. If it breaks my resistance lines, I'm gonna buy in. I already know how much money I need to make by going to my stock profit calculator to figure out how much money I need to make to at least make $50. So I have my alert set for that, and I put my stop loss in. And stop losses is something that you guys probably need to Google. I put my stop loss in to figure out when I want to get out, and I have my limit set to figure out when I'm going to buy. And it's really that easy, guys. Stocks run all the time. You have these pennies that run all the time. And for the sake of just time, I will show you one more that I invested in that ran. So here we go. Last month, we see, here we go, boom. Here goes another one that ran. It's still kind of trying to run, but it's the same thing. We got in here. We get in here. It runs up, or here, so it runs up from $1.26 all the way up to $1.50. And I know you guys are like, man, that's not a lot of money, but let's do our $500 again. So we invest $500 in a stock that's sharing at $1.25. How many shares do we get? We get 400 shares. So 400 shares, and the final price is $1.50. Sales commission, initial shares was $1 and let's say 21 cents or 25 cents. Easily you can make $90 on a 25-cent move. If it goes up, let's say 35 cents, 45 cents, 60 cents, 60 cents, you can make $230 on a 60-cent move, which is very, very, very possible because as you can see, it did continue to go up all the way up to $1.61. So I hope this is helpful to you guys. If you guys have any questions, please let me know. I know it's a lot of information, but the information is there. You can rewind the video. You can go back, listen to it again. Please feel free to email me or write me any messages, kind of helping you out. Scanners that I recommend Yahoo. I recommend Thinkorswim. Brokerage accounts that I recommend Fidelity. I love Fidelity. They have low, their sales commission is really, really low, and it helps you as a trader keep your, the lower your cost, the more money you can make, pretty much. That's it, guys. So that's it, guys. It's that easy. I really hope all this helped you. I hope it wasn't too confusing. I know we talked about a lot of different things, but I really tried to keep it as basic as possible. There's tons of different things that we can add on to this that will help us become even better day traders and even predict the market in such a better way that we really won't have any losses. But this is the bare minimum that I think you should do to start day trading. The more that you learn about the market, the better you'll get. The more you'll start to see trends, the faster you'll be able to identify these stocks that run. My goal here is to really get you guys excited about trading. There's money to be made every day, and if we sit at home and we put our money in our savings account, we're losing. Banks do this all the time. They don't day trade, but they have your money in the stock market. That's how they make more money off of your money, right? So if banks are doing it, I think it's okay for us to at least learn how to make money. Money isn't scary. Money is the essence of everything that we do. So if we understand it, we can live a higher quality of life, and that's what I'm trying to help you guys achieve. Thank you. Please, if you guys have any questions, feel free to write it in the comments or send me emails or whatever you need to do. I'm really here to help. I'm not the most knowledgeable person, but I do feel like the few things that I have learned can be very beneficial, and maybe you guys can take it to the next level in your day trading. Take care.